following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the reach do we go, dear friends. As always, we like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
And, well, we're flat on the S&P. We're up 25 points on the NASDAQ. And just kind of, again, a lot of people trying to get a little bit ahead of the game going into earnings for the next few days. And, of course, probably a handful of people shorting it. I think it's I'm not expecting any kind of big gyrations until maybe Friday. And that's if we have some kind of clear-cut idea of how earnings are going to come in. We've got some on the upside. We got some on the downside. Not a real theme yet. And it may take actually into next week. But I have a feeling that maybe a few of the ones coming out Thursday night will be able to give a little bit more clarity about what's going on. Also today, some saber rattling on the North Korean front kind of put a pall on the bounce earlier in the day. No pall on that NASDAQ, still up 26 points. But a lot of people getting out of the riskier stocks here today, and that's kind of what has brought the market back down. But what else can you say about it? Well, we got a lot to talk about today, and my guess is that we better get this party started.
And it's all just a little bit of history repeating.
It is history repeating, and guess what happened on this day in 1978? Yes, on this day, one of the best films of my childhood, my semi-adulthood, came out in 1978, National Lampoon's Animal House, a movie spoof about 1960s college fraternities starring John Belushi, which it really didn't. He was kind of a in-the-back player. Opens in U.S. theaters, produced with an estimated budget of $3 million. Animal House became a huge multi-million-dollar hit. I think it made upwards of $200 million off of $3 million spent, spawned a slew of cinematic imitations, became part of pop culture, which I can't even speak now, with such memorable lines as fat, drunk, and stupid is no way to go through life. And what is that? I just can't see her. I got so many reflections out here. Down the drain. Find Billy Germans. Oh, maybe we have it up here. Oh, I do have it. I thought I had lost it.
Fat, drunk, and stupid is no way to go through life, son.
No, it isn't. And finer words have never been spoken. Anyway, we may play a few more of my more favorite clips out here of that. But always it was a fun movie and a fairly dark time. Everybody was kind of dour and sour. Economy wasn't doing well. Interest rates were 18 to 24%. The dark times. The dark times indeed.
May I have 10,000 marbles, please?
Of course, there was good and bad. Animal House was written by a bunch of folks that actually were writing a magazine called, yes, National Lampoon. And one of my more favorite monthly magazines at the time. The best part of it is they had these letters to the editor at the very beginning of it, and no way you could get these by the snowflakes and timid of today. But some of the funniest writing of all time. And of course, I had already read, I think it came out in 73. Doug Kinney wrote kind of Animal House on a serialized version during that year. So I kind of knew what to expect. I went and saw it the first night it was out. I remember the theater I went to. I remember just dying laughing. And of course, wanted to see it because maybe the best movie ever made by John Landis came out the year before, which was Kentucky Fried Movie. I thought I was going to get the same thing, and it was a little different. It was actually had an entire theme for the entire movie, but I think back fondly to this day in 1978. Now, what do we do to make money? Well, probably the worst thing you can do is trade all the time. I opined somewhat on this theory last night, or no, not last night, actually today in my morning newsletter, and that is sometimes there's just not a lot of reason to go up there and try swinging when you know all the balls are going to be to the outside of the plate. Just let them go by and wait for the fat one down the center of the plate. Well, I don't see anything right now that says that we are going to break higher or lower, and I'm not one to flip quarters. And I'm not one to pick up change in front of a steamroller either. We are building up some steam to move. The question is that higher or lower? The odds right now, I suspect, are about the same. Although, if we have a couple more days like yesterday, the amount of shorting being piled on makes me think that we're probably going to gap higher, even if we're going to go lower first. They're going to wipe out a few of those shorts. And then maybe we get that kind of reversal day that we've had in markets of the past. But so far, kind of a quiet market. We had a bounce, not a lot of volume. And again, the NASDAQ's holding up fairly decently on kind of a bad day with IBM. But we'll talk about that. IBM did have earnings, whiffed. And again, we talked about this before it even came out. I kind of like it around this 155 level, maybe 158. They have changed their businesses hugely, and this is one of the companies that has actually overhauled what it's done 3 times already. This would be the 4th major change in the life of IBM. And, of course, there are going to be some rocks and potholes as you travel down that road. Again, they've got a lot of stuff going on, but when you're selling haven't got the volume to really spread out on those with the Watson series yet. They are saying that sales will be good. The question is, can you time it with a company that's opaque as IBM? And I think you probably can. Probably what you're looking for is Mr. Buffett to buy some more shares. Down on heavy volume today, which suggests you're at least going to get into these 2 lower gaps. The first gap is
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we are back, as I was saying, IBM, you're down on lots of volume. You got two gaps down here, 152. Could get opened out here. I think the business is pretty good. And the problem is just finding the right level to buy this thing at when Watson really takes off. It's in the right sector. It's got a few other businesses that are just now getting fired up. Long term's pretty good. The question is, can you find the right bottom to buy out here on IBM? I think that there's a reason why Buffett is buying this business. And eventually, I think he will be proved right. In the short term, though, 152 looks like an option out here. SMH. Semiconductors had a little bounce out here today. I think we had a few phone calls about this. I said you really hadn't had a signal that showed that maybe there was anything that you wanted to short out here. And the SMHs, we finally got a pullback off that March 31st high down to the April 13th low. Now, if you were thinking about getting bearish, is a much better chart pattern possibly setting up. I still suspect that we could get back up to 79 or maybe even just another buck higher or so than we had today out here. And that would set up a better pattern. What you're really probably looking for to get the best opportunity is a close below the 3x3 displaced moving average. I can't really, you came off, you had a couple of days with high volume. You're going back up there with lighter volume now. But I would imagine after, a few more days, if you just take the average of the last 3 days and put it 3 days and forward for the last 3 days, you'll see this line that I'm talking out here. And that's, I think, what you need to break, which would mean that any close below 77.50 would give you a pretty clear indication that this is going to break and probably do a 50% retracement back of this big move up down to $67.49. So, what does that tell you? It's basically a $12.50 move. So you're looking for $6.25 off the high. So that takes you from $80 down to $72. Is there a lot at that $72 level? There's kind of some consolidation back in the December 8th through, what is that, about the first of the year. That probably could act as some support. Question is whether or not that's enough for you to go out and pull the trigger on this for $7 on the downside. Maybe options or something else would give you a better bang for the buck. I just don't see that as a huge trade unless the wheels came off the geopolitical wagon, which I don't suspect is going to happen. What else do we have going on in the market? CMG having a good day. We'll take a look at this. CMG. This has been on a roller coaster straight up, and just probably because of the huge short interest in this thing. It's varied from 25 to 30%, and I imagine everybody's been shorting it all the way back up. I haven't really taken a lot of time on this. It continues to just move higher. Again, no sign out here. Lots of light volume since the last gap up on the 31st of March. But again, no real signal yet. And just like the SMHs, if I was really thinking about the downside in this market, I'd want a little pullback. I'd want one more push higher and make sure that there was nothing in that push higher. And then maybe a close below some number like the 3x3 displaced moving average or something else to signal that we were actually right and not just once again predicting the end of the world when it didn't come. What do we I heard a lot of calls at 2365 for the end of the world in the S&Ps, and here we are, 24 points lower. It's just I'm not expecting a whole lot higher. I'm just saying that for the most part, I don't see a lot of signals in the market. When the market's going to move, we are going to see a lot of signals. It's not going to be a very tiny amount of shares of tiny few stocks that all start selling off. It's going to be a great deal of stocks selling off. But at least you've got a couple of them, if you are bearish, that are close to possibly making some signals that would say it was time to pull the ripcord. What else do we have out here? CMG, we did IBM and SMHs. GPC. Up about $2 today. This came back, never really tested the lows, went right back into a rather large sign of strength back on November 10th. Did so on vastly lighter volume. You had about 2 million shares back there in November. You came back into it with about 600 some odd thousand shares for the biggest day down. Actually, 1.3 million shares back on the 3rd of April. So, you got a nice spike out here today. The market's kind of not cooperating for a big day like this. Got to 94.96. Is there a lot in this one? Not really. This one could go either way, back down to 86.03 or back up to $100.90. The question is, which way is the market going to go? And as long as we're stocking these days, we're at 7 points up and 7 points down, and nothing happens until the last 15 minutes of the market, I think we want to start seeing action intraday that we aren't getting. I mean, we had a little bit of a pullback today, but again, to me, it would be 10 times more telling than the last 20 minutes of today that we sell off than that we sold off intraday when we heard some news about possible North Korean entanglements. What else do we have? I want to look at a few other stocks. Amazon, a little higher earlier in the morning. Again, what we're looking for in some of these is some kind of signal. And for those people that are bearish on Amazon, you could make a case of this if it could close back below the 3x3 displaced or a 9-day moving average. We'll just change it to the 9-day real quick, and you can take a look at that. It's just above either one of them. But at this point, as long as it continues to hang higher, I'd still say that there's an 80% chance this goes to 1,000 before it breaks below 780. And I'm kind of bearish on the thing, but the odds are pretty much overwhelming of stocks either hitting $9 and going to $10, of $90 going to 100, or $900 going to 1,000. It's why the world, at least in the United States, ends with 99 cents, because it doesn't sound like a whole nother dollar. And for most people, $900 or $1,000, not a lot of psychological difference in it. No, I'd say that there's nothing that really gives you a signal that it's short Amazon yet. If it would close below either the 9-day simple moving average or the 3-day displaced moving average, you might want to take a look at it. In any case, I would never play Amazon without using options. I would never actually do anything with the equity itself. We'll be back after this short time.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Yep, it's a food fight day. Anyway, we're going to go to Mike in Toronto. How are you doing today, Mike?
Hi, thanks for taking my call. I'm short the IBB through the LABD, and I've been in it for a while, and I've suffered the K. Yep. And I just wonder if you see a retest of the February 2016 lows, in the near future, or maybe even in our lifetime?
Well, certainly in our lifetime, anything can happen. If you listen to the very beginning of my show, there just aren't a lot of stocks on one side or the other, ready to break out or ready to break down. This is kind of this chop, and there's no real clear reason. I have been out of the market for my short-term swing trades since last Wednesday. I haven't found anything I want to put money on. So if you're asking me,
long or short. So I mean, it's a trendless market. Is that what you're trying to say?
Yeah. Well, I'm going to tell you that all the work that all the academics have done in the world comes up with the same numbers that I come up with when I did my own tests. And that is that 50% of a move of an equity is from the broad markets. About 25% of that is the sector. About 25% is the individual stock itself. Now, some of those kind of bounce around a bit, but for the most part, that model is kind of accurate. So if you don't have a market that's moving real far, and you don't have an index like this one in the biotechs that's doing anything but going sideways, it's not uncommon to just wait until something actually does happen until you actually put a trade on. I don't know when you shorted this or where you were looking. But to me, if you're out in a boat in the ocean and there's not a breath of wind, which way are you going to go? You're going to have to wait until that wind comes back up. And I just don't see which way that wind's coming from. Today we're going to end up flat on the day. It's more important in the last 15, 30 minutes. I've just been out of the market. I don't know if there's a good call to be made more than flipping a quarter. So I'm not going to tell you that I've got some kind of deep insight into the IBB, mostly because there's just a lot of...
When is the SEC going to close down these triples?
I don't know if they are or not. I know that they talked about it last year. Yeah. The one of the reasons was kind of the equivalent of what we were talking about on Monday, which was the inability to actually get the futures and options for these leveraged ETFs. Now, that was in a smaller one so far, but that's kind of what they've been looking at. I don't know if that's actually ever going to happen. They were really talking it up in the fall. Maybe that was just to raise money from people on Wall Street. It's kind of a threat.
Lobbying.
Sometimes it can be that. But they were fairly serious. This wasn't just something that they went through. But again, these things take a lot of times 2 or 3 years, and then you find out, and it actually happened. My guess is if that actually is going to happen, it's going to probably be pushed by FINRA, not the SEC. So the FINRA guys are kind of looking at this and thinking that maybe they want to get out of a little of these leveraged funds. But at the moment, I think the first thing they're going to do is take the ones that have almost no volume and try to push those guys out, so that the ones that are fairly liquid will probably be around at least for a while, and the less liquid ones look like, from what I've read, are the ones that they're going to go after. So if you've got in an ETF that is a double or triple and it trades 1,500 shares a day, those are the ones you probably want to avoid in the near future, as you would any stock that has 1,500 shares a day, right? But there's a lot of those ETFs that never caught on, and those are the ones you kind of have to watch out for right now, I would think. But most people, I don't hear a lot of people calling TFNN with the bizarre ETFs no one's ever heard of. So probably not a big problem for our listeners. But
you mentioned something about the academia. You read a lot of these theoretical papers by these so-called prestigious financial academics. Do you realize that many of these prestigious financial academics, particularly up here at the University of Toronto, don't trade for a living?
I certainly do.
They subsist on their money from the government, basically through grants, through research grants, and the fact that many of them they teach 1 or 2 courses and they just go back to their offices in the Ivy Tower and write journals and articles that nobody reads except you.
That's an excellent point. And what did I say that I did? I duplicated their results. And that is the difference. If anybody that reads my newsletter will know that I don't really push anything unless I can do it myself or I can follow what someone else has said. And so literally, I wrote a charting program so I knew how every single indicator worked. I've written my own program to generate the summation index. I've written my own programs to go back and look at the problems with the leverage VIX products, UVXY. And so it's not like I'm kind of just driving by looking at their white papers and saying, yeah, because most of them aren't worth a lot. I'm just saying that overall, I have to agree with the model that says 50% of a stock movement is based on the broad indexes, 25% on the sector it's in, and 25% on the stock itself. Now, sometimes there's big news in a single stock that swamps that. But over time, if I was seeing all the gold stocks go higher, I kind of think that they're, birds of a feather fly together, and there is a reason why. If I saw all the semiconductor stocks all headed lower, I think that there's more than an individual issue with a single equity. But again, if you have a market that's kind of up and kind of down, but a sector's that's down, and then you're trying to go long a semi, you basically end up with nothing, right? And that's kind of the problem that I see in the IBB. You got a market going nowhere. You got a lot of biotechs going up and going down, and all it does is drive this thing sideways.
So, what do you think? So, what's the outlook then? Do you think something's got to go? Something has to give here. Okay, I mean, I'm not bullish. I'm not bullish on the chart. Okay, and I'm definitely not bullish on the chart. But I don't know what is going to trigger a downfall here. Maybe a general mass correction or something that would cause sell programs to be generated.
Did you hear me the other day talk about asymmetrical triangles?
May have, yeah, I may have. It's
lower highs, higher lows, right? And you keep on making higher. You make slightly lower highs, and you make lower lows, and the market just keeps kind of coming in, kind of like the last 14 days here on the IBB. So you end up with these narrowing ranges, and what happens is normally you get the first break out of that about 75-80% of the time is the head fake. So what you want to do is wait for these things to break and then see after the fact which way you want to fade. What you want to fade. Okay. We'll see you all back here shortly.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Well, after that conversation, I thought we'd just go to the newsletter because I kind of covered that this morning. And, of course, you can use all those Tiger dollars for the path of least resistance. But I kind of went through why I'm literally sitting on my hands and waiting for after Thursday night until those earnings. But I started off today with a quote from Jesse Livermore. What beat me was not having brains enough to stick to my own game. That is, to play the market only when I was satisfied that precedents favored my play. There is a time for all things, but I didn't know it. There's the plain fool who does the wrong thing all the time, everywhere. And then there's the Wall Street fool who thinks he must trade all the time. The desire for constant action, irrespective of underlying conditions, is responsible for many losses in Wall Street, even among the professionals. They feel that they must take home money every day as though they were working for regular wages. And when I first read that book, it hit me like a ton of money that I was over trading. And this is probably circa 1999, 2000. And I my comment on that is when I make big money, it's generally because I had to wait for it. And when the signals had been big and they weren't just a little bit, they were pretty huge. Yeah, and mostly when I talk about stocks here, it's all about the first signal, which is a test of a previous high on half the volume or a test of a previous low on half the volume. And that is my game. I add one more thing from Jesse Livermore in there. There is only one side to the stock market. It's not the bull side or the bear side, but the right side. But I may add one more, that being agnostic and having no side. Models can be trouble, as I've stated before, and the gentleman from Toronto has said from the academics. But there's one thing that my model does very accurately, and that's when there's no movement. I've probably been better off at calling doldrums than any other person I've ever heard in the market. The news is if there aren't many stocks giving signals with highs or lows, if the volume is lighter up and lighter down, more than likely you're trying to sail with no wind, trying to fish when it's raining. If someone goes to the center square of the first move on the tic-tac-toe game, the game is moot. Nothing and no one will win. And again, that is that. Right now, I don't think we have much of an edge, in my opinion. That will change as markets have a deep beliefs that things are either getting better or worse. Right now, the market's trying to decide, are things getting better or are they worse? This week of earnings, the collective whole is trying to figure out where we are headed. But the action of equity holders shows little in the way of decision so far. Again, we go to waiting for earnings. I expect it will take through Thursday after the bell, get the market on one side or the other. of my aforementioned belief that things are either getting better or worse. I think the market does not know proverbially whether to wind its watch or tie its shoes. But anyway, that was kind of my opinion for this morning. So when we talk about some of these things, again, especially as a new trader, I didn't know that you could do nothing and that maybe nothing was pretty good. And I will paraphrase Cool Hand Luke. Sometimes nothing is a really good hand, a really cool hand. And I'm feeling very, very much the Cool Hand Luke today. Umbrella, the stock AMBA, is a little bouncy out here today. Kind of was looking at this one because it was bouncing off its previous lows and maybe thinking that one of these days I might catch a big move in GoPro. It's just going sideways out here. It did come off 714 and up to 931 recently, but not a lot happening in that. Amgen, Amgen, what do we got out here? Okay. That's what I was saying for the previous caller on the IBB. To me, it was kind of tough to really look at the IBB short or long because there's about half of these that look like this chart. AMGN, this thing gapped up on the 3rd of February. It did so on 3.4 million or 7.4 million shares. We're back into it. The last few days have been 2.3, 2.5, 1.5 today, 1.6. So we've come back. We've gone up on strong volume. It did come down on that one day on kind of heavy volume, but we have not had any kind of continuation of heavy days. In fact, it's kind of gone rather flat. Now, if this wouldn't have come down on heavy volume on the 17th of March, I probably might have gone long. But there's enough of these stocks that are giving both signals to go long and short, and that this could get back into this gap that actually happened at 157 just a couple of days before. That's the gap on the 1st of February. So, again, sometimes no hand is a pretty cool hand. So that is why I'm kind of looking at these things. You don't always have to have a trade, is the theme of today's show out here. And what do we got? We'll take a look at a few more stocks. Yelp, I've been watching this one the last few days. Every cat can have a dead cat bounce. I was watching this one. It's got all the same problems that what do I want to think of? Facebook has, but not near the stature. It did test its previous low within a penny on about 1 million less shares. March 27th, $31.60, 2.4 million shares, 1.6 million shares on the 17th. And we kind of come up here on 2 days with light volume. Energy was a little bit too much out here on April 5th, back down to this April 17th low. So I'm not thinking this thing does anything but go sideways. But huge short interest. And right now, as I have no positions, I'm looking for two things. I want to look at stocks that are very weak and may make a signal to short, like the SMHs. I'm also looking at stocks that could rip your face off with a 2 or 3 day rally just on short covering. And some of these stocks out here like Yelp look like maybe one more time to the bottom. If the volume gets under 1 million shares, you could find a temporary bottom and the kind of rip your face off. Other stocks that maybe look a little weak out here, huge moves to the upside is SodaStream. This came up on monster volume on February 15th. I still have yet to see anybody in a Bed Bath and Below actually buy one of these things or buy a refill or anything else. That may be anecdotal, but I'm wondering where all this business is coming from. I have to scratch my head and wonder who's buying all this stuff. Apparently, maybe somebody is. Maybe it's overblown. But what we have seen is this 3.67 million share high on February 15th get taken out with about 441,000 shares today. Yesterday, about 300,000 shares. So we are going to break above previous highs on lighter volume in SodaStream. Now, does that mean short it today? The answer is no. As I said, I suspect this market is looking for something out here to hang its hat on, and I would much rather wait than anticipate. I would rather act than aggressively trade in front of it. KSU, another stock out here that is up into the previous highs with lighter volume. We'll talk more about this one, and you can give me a call at 877-927-6648. Email me at tfn.com. Be back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we are back. Volume picking up just a little bit. It's still pretty benign. Off 4 points in the S&P cash so far today. And what are we still up 14, 15 points on the NASDAQ. So no blowout today after IBM's whiff and huge move down. We're going to look at a few others. We're going to say Kansas City Southern. A few of these train companies have been looking fairly good. But, of course, you had a huge volume down day back on the 9th of November with 13+ million shares. It's been banging against this rather regularly with 2 or less million shares back into this gap. Kansas City Southern kind of came up here today and did it. Again, not a lot of volume or energy back up here. This one off this $81.54 low didn't have a lot. So, again, hard to really push a thesis where the market's going to the moon. It's not like we came up here on a lot of energy, but again, probably not enough energy to say that we aren't just in kind of a bigger trading range. This one looked fairly good in the morning, and actually not too bad today. This is NetEase. Took off fairly nice, good wipe-off pattern, huge sign of strength on the 16th of February, did so on 3.7 million shares. It's come back down and done so on 1.2 million shares today, kind of hanging in there. But again, half of this trade is going to be the direction of the market, and you got to get that right. And right now, since I don't have a direction on the market, buying anything would be like flipping a quarter, and I don't do that. That's the difference between gambling and intelligent speculation, or so I'm told. Heartland. Nice little pop out here. This one has come in, made a lighter test. This is a big transportation company. We talked about this yesterday. I wanted to see how this one did, if it really rolled over with the market, maybe pulling back a little bit after IBM. Didn't do much so far. Last low, January 27th, $19.24. Got into it with 800,000 shares, so less than half of that low. It's bounced back into the trading range. What I do like about this one is the energy off this March 1st high back into this April 13th low did come back quite a bit. So this $19 level looks like fairly decent support in this transportation stocks, in the semis and all of that. What else time do we have? I was going to look at Facebook. Man, I tell you what, I have yet to see a company that goes up on news that it's got problems with snuff films and kiddie porn on their website. But Facebook apparently is benign to all of it. Nice move higher today on 12.4 million shares. You just wonder if the news flow was good on this, what this stock would do. And again, maybe it's more about earnings, and they really don't care what happens in the news on this. In the short term, a lot of people own this thing, have owned it for a long time. But again, even on a day like today, where we kind of got a little bit of a pullback off the earlier push, still holding higher and not giving me any big signals of anything else going on. Let's take a quick look at Microsoft. This one's kind of come down. Not a lot of volume so far, 15.5 million shares, which is kind of in line what we've had. So going to be interesting to see. 64.58 is the April 11th low. I think you can make a pretty good case that that is going to get tested. And it's not that far away. But again, just in a lot of consolidation out here. Does this make this thing break out of the range? Today, probably not. Maybe in the future, in the next few days. But we'll have to watch these carefully. No signals yet. In the meantime, sell when you can, not when you have to. We'll see you tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.